It is a time to discover how to build a culture of innovation inside companies and make them a long-lasting discipline. We would like to welcome Rob Galbraith, who is a world leader in insurtech thinking with over 20 years of experience in the financial services industry and in a variety of leadership positions. Rob is the author of the book, The End of Insurance as We Know It. With you, Rob Galbraith and his conference, The Future of the Insurance Industry. Rob, welcome.
Thank you so much. It's a pleasure to be here. I want to speak to you today about my experience in the insurance industry and the rapid change that is to come for all of us who have worked in this industry for our careers. It is a long journey and an industry Miguel and I were talking about just before coming on stage that for many of us, much like yourselves, that we may have come to this industry because we do not like change. We do not like risk. We are risk adverse. I spent most of my career as an underwriter evaluating risk, pricing risk, deciding what the appropriate charge would be, whether this is an appropriate risk that my company should take on. And so it's difficult for us to change. As a child, and at the opening of my book, The End of Insurance as We Know It, I talk about going on trips with my father and my mother to see other parts of the United States. And I would always have maps as a child that I would follow along on our journey. And paper maps have been used for decades for families that are going on automobile trips. And even before we had automobiles, they were used by ship captains that were exploring new worlds and new lands. So the technology behind maps has been an important navigation tool for centuries. We have really come to rely on them, and they've evolved as our needs have evolved over the course of centuries. But in the last 10 years, we have seen an explosion of new technology with the introduction of the smartphone, new ways of computing, new ways of telecommunications, the use of big data, artificial intelligence. And so we don't really use maps at all today. We use global positioning satellites or GPS on our phone to navigate and to tell us turn-by-turn instructions on where to go. We haven't spent very much time talking about where maps have gone. We have not had a funeral for maps or said, goodbye to maps. We've just made the switch over time seamlessly from one technology that's been with us for centuries to a whole new way to navigate our world in a very short amount of time. And one of the superior things about the global positioning satellites is they can tell us exactly where we are, and they can tell us at that precise moment what is the fastest route. They can tell us which roads are under construction or which roads have a traffic jam. And so in some ways, they're far superior to maps because they give us real-time intelligence on what is actually going on to give us information to allow us to make better decisions. And so as it is with insurance, that new emerging technologies are going to quickly allow us to run our business in very, very different ways than we've done traditionally. No longer will we live in a world of paper maps, but we will be living in a world of global positioning satellites. And so I want to talk to you today about some of these changes and the implications that they have for the insurance industry in Colombia and globally. We live in a world of constant change, and change, not just it's constant, but is accelerating. It's getting faster over time. I show this chart in my book to make the point that when we see accelerating change, we're on an exponential curve that's getting steeper and steeper and steeper. But when you're early on in the path of an exponential curve, it feels very linear. It feels like a straight line. And that straight line is characterized by a steady change, constant change. And so you feel that you can anticipate how fast the industry is changing and where those changes are headed, and that you and your organization can adjust over time. I've been in this industry for 20 years, and I've seen change in the insurance industry. But the change over the next 20 years is not going to look anything like the change over the past 20 years. It's going to look much different, much faster. And we need to prepare ourselves for this new world where the change becomes steeper and steeper and faster, that we cannot hold on to the old ways of doing business. I contend that over the next decade, between now and 2030, we will see more change over the next decade than the past 3 decades combined. So I want to take a moment to think about the insurance industry that we know, that we love, that provides so much value and so much that's good for our society, for our citizens, by giving them financial protection, by allowing them to take risks, to drive, to buy homes, to start businesses, and to think about the ways that insurance does not always meet those customers' needs. It's tough to think about because there's so much good that we do as an industry. But there are a lot of areas of opportunity for improvement, ways that as a society, we want insurance to work better than it does. Those 7 fatal flaws, as I described them, are as follows. Insurance is too expensive. It typically costs a fair percentage of premium in order to provide a policy. Typically, it might cost 30%, 40%, or even 50%, depending on the line of business, in order to provide coverage for that line. And that's simply too expensive. We would love to have it down to be in the single digits. When you use a credit card, for example, and you purchase something, or if you use a credit card to buy something that's been lost, when you swipe that card, it only costs you about 3% between the card issuer and the bank. There's regulation, there's fraud, but yet they can do so at a fraction of the cost that insurance has. And so we always want to keep driving the cost of providing insurance down. And by doing so, we actually make insurance more affordable and more accessible and allow new products to come to market, products that cannot exist today because the cost of providing them is too great. Number 2, insurance is too confusing. So when you spend a lot of money as a consumer on things like insurance, if you think about the cost of electricity or the cost of water or the cost of other things in your life, what you spend and what you get in return is very obvious. It's like a light switch where you turn on the light switch, the lights come on, and that's why you pay your electric bill. But for insurance, the coverage that people think that they're getting often is not quite what they actually have. It's a legal contract and a financial instrument all rolled into one. And it's very confusing for non-insurance professionals to understand. And so it's not simple enough for consumers to ensure that they're buying the right product at a fair price and that they know what risks are covered and are not covered. It's too easy to what I described, game the system. Fraud is a major concern, and combating fraud is a large expense that insurance carriers have to face. And so because there is so much fraud and expense and resources devoted to fighting fraud, that drives up the cost of providing insurance. It is a cash drain. So over and above being expensive, because you are constantly paying money out for insurance, and the chance that you have a claim is relatively small for each year. That's money that would be valuable to you if you were able to keep it, if you were able to invest it in your retirement or for university or in a business. That money, that cash has value. You can earn a return on it. And by providing it to insurance companies, of course, we invest that money for them, but there's value in having cash. Again, I use a credit card as an example where you don't have to incur the cost until you swipe the card. And then once you pay with a credit card, you can decide to pay off the balance right away or a little bit at a time. You have a lot of flexibility in how you pay off that credit card debt. But with insurance, there's not a lot of flexibility. You have to pay the premiums up front. And so there's value in being able to hold on to your cash. Insurance does not cover all causes of loss that you might want to have covered. Particularly, we think about catastrophic losses that can be highly expensive. There's limitations in contracts for a reason. And so some people are trying to get coverage that simply doesn't exist because it cannot be provided at a reasonable price today. It does not cover everything that you would want to insure or everyone that you would want to be insured. And so these are problems for societies because that means that people must save money for a rainy day, for unexpected contingencies, money that they may not have, that the government may have to provide to them in their time of need, or that if the family does save money for that rainy day, that's capital that they could be using, again, to invest, to spur the economy. This is a big problem in China, where they do not have a robust insurance marketplace, even though they have such a large economy that's grown tremendously over the past few decades. Families in China routinely save about 40% of their income because they cannot buy coverage for the items and protection that they need. And so that money that's saved up is not being used to help invest in the economy and move the economy forward even more. That's a source of tremendous capital that could be unlocked if they had a more developed insurance sector. And so it's important for countries to have a robust insurance sector, not only to allow for risk-taking, but also to free up capital to be spent on their economy and to move the country forward. So I've talked about what's wrong with insurance, the so-called fatal flaws of insurance. And each of these fatal flaws provides startups, technology companies, people from outside of our industry, an opportunity to come in and to do things better, to reimagine insurance. Insurance globally is a $5 trillion industry. It is massive. In Colombia alone, it's almost $10 billion US. So it is not a small industry by any means, and only growing greater. And because there's billions of dollars in the insurance industry, that is an attractive target for people from Silicon Valley and other technologists and entrepreneurs, venture capitalists, and other sources of disruption that they look at as an opportunity. I've got a very large industry, which is the insurance industry, and I have an industry that does not always adequately meet the needs of its customers, and that provides an opening for them. And that opening can be handled in different ways. That could be through partnerships with agents, with brokers, with carriers, or it could be auto manufacturers, it could be retailers, or it could be an opportunity to go direct to consumer. And so sometimes that can be a competitive opportunity for us in the insurance industry, but it could also be a competitive threat. There have traditionally been three barriers to entry for the insurance industry. Barriers that were difficult for a new competitor to come in and to disrupt the industry. And those barriers are, number one, a reliance on historical data. Insurance is unique in that you charge a price before you know the cost of your product because you're charging the premium ahead of the losses. And that's why you have to have actuaries and predictive models and algorithms to determine if you're charging the appropriate premium for the risk. That's why we rely on the law of large numbers to ensure that if we pool enough risks together, while we might not get the price on any individual risk, in aggregate, we are providing a sufficient premium base and return. The second barrier to entry is a need for trust to transfer risk. This is not like a ride-sharing app that takes you from your home to your airport or to a hotel, that if you didn't like it, you can switch and go back to using a taxi or use a different service. Or even a retailer where if you get a package delivered to your door and it came banged up or it wasn't delivered properly, you can switch. Because you're talking about placing your trust with somebody for this risk that this will be covered in your time of need, you really don't know what you've got until the moment of the loss of whether you have a good insurance agent and a good insurance carrier or not. And so trust is critically important in our industry. It's difficult to build trust. And so that trust is difficult for somebody from outside to overcome. And then third, a lack of customer engagement. Most customers do not want to think about insurance. Insurance is something that they buy in order to do the thing they really want to do, to go drive a car, to rent an apartment or buy a home or to start a business. And so once they've checked the box, once they have the appropriate insurance, they probably aren't going to think about it again unless either their premiums rise to go up and they may decide to shop, or if they have a poor claims experience. But otherwise, people do not interact with insurance on a daily basis. And so it's very much a set it and forget it type purchase. And so because consumers don't think too much about insurance, it's difficult to get them to focus on it. But you can see that there are emerging trends and technologies that are helping companies overcome each of these three barriers. For reliance on historical data, we now have telematics. We now have the Internet of Things, all manner of sensors and devices that stream data stored in cloud computing and can be processed by artificial intelligence. You've got aerial imagery, you've got smartphones. And so we can come up with almost real-time evaluations of risk that, yes, use some historical data, but do not rely on 3 to 5 years of historical data in the way that most insurance has traditionally relied on years of historical data in order to be priced appropriately. There are platforms and there are ecosystems with technology. There are parametric solutions that don't require a lengthy insurance contract. There's the use of blockchain and distributed ledger technology to help build digital trust between two independent parties. And there are mechanisms such as user reviews and other ways to provide feedback that hold companies and agencies and brokers accountable in a way that we've never had before. And then certainly there are much more engaging digital tools than simply face-to-face conversations or meeting somebody in their office to talk about the purchase of insurance today. In this time of the virtual world that we live in, there's so many more ways to connect and to interact. And that could be via video conference, via chatbot, and even more and more companies are rolling out what's known as credited insurance, where it is just part of a larger transaction, whether you are renting a car or flying a drone or doing some other activity. That travel insurance is a great example, where you're purchasing your airline ticket and you just add the travel insurance as part of your airline purchase. So I want to talk to you about a framework that I use that uses the acronym SCALED to think about all this new technology that's coming at us. And it's important to focus on these technologies in order to make sure that your organization is ready for this world of accelerating change. And the important part, the important characteristic is to be agile, is to be flexible, because we do not know what the future holds. If 2020 is any indication for us, with a global pandemic, and we've got elections and leadership crises around the world, we've got economies that are on the brink of recession, if not into recession. These are challenging times. And so we don't know. We didn't know coming into 2020 what the year had in store for us, and we certainly do not know what 2021 or future years holds for us. But that doesn't mean that we don't prepare for the future. We must prepare as best we can, but we also must be ready to adapt to whatever does come our way. So the tenets of the scaled framework, the S is for streaming data from sensors. And this is radically different than the way that we have measured risk in the past. We've often assessed risk based on characteristics, the age of the driver, the type of vehicle, the number of miles driven. These things are very loosely approximated to the risk of an accident. But with telematics, with the sensors, we can be in the car. We can see almost as if we were a passenger next to the driver, observing the driver. We can actually see or get as close to being in that car and seeing their driving as possible. And through all of this data, I don't need to know how old the driver is, and I don't need to know the age of the vehicle or the miles driven. I can actually see the driving behavior and measure the risk each and every day. And this is translated into a whole a range of industries of applications. It's a new way, an entirely new way of viewing risk that will be much superior than the old ways of assessing risk. And so we must understand the power of these sensors and the Internet of Things. The C is for cloud computing. So all of these sensors that are streaming data that if we were to look at it wouldn't mean very much to us, but it's a massive amount of data. It must be stored somewhere. And so storage was always a limiting capacity for us before. We didn't capture all this data because we didn't have any place to store it. But now with cloud computing, storage is essentially free. It costs virtually nothing to store a massive amount of data. So it's best to get the data first and then to determine what to do with it later on. Algorithms and artificial intelligence are the A in scaled. As I mentioned a moment ago, we have all these sensors and we have an ability to store the information. But this is not something that you can really look at in a spreadsheet or in a chart. It's very difficult for humans to make sense of it. And so you need some algorithms to help you make sense of this very minuscule data and this massive amount of it. And again, we now have the computing power to do deep learning and other techniques using neural networks that go far beyond our standard generalized linear modeling or other regression statistical techniques that we've used to evaluate risk in the past. And you can run many different algorithms to assess risk and get different views of risk and a more holistic view of risk than you ever could previously. The L is localized knowledge. So in the past, we would look at particular geographies, particular areas. It might be a state, it might be a city, it might be a district within a city. But now we can actually personalize insurance. We can create one-to-one customized insurance products because we can get down to the GPS location and know exactly what's going on in your world each and every day through these sensors and the risks and hazards that you face. And so again, we can be much more precise in our pricing and our underwriting of risk in a way that we could never do before. The E is for efficiencies in the back office. So there is a lot of paperwork in insurance, and there is a lot of checking and verification and many different parties to the insurance transaction. It's not just the agent and broker and the carrier and the insured, but they may make the contract of insurance, but there's a whole host of people around that group that participate in the insurance ecosystem and transactions. And they all need to be concerned with data privacy, data security. They have a need to exchange information back and forth. And so all of these parties exchanging all this information can be very time consuming and very manual and very costly. But through the use of technology such as robotic process automation, optical character recognition, natural language processing and natural language understanding, and many more, the ability to take a paper form and to read that form digitally and to take that information and store it digitally and manipulate it digitally and process it has been unparalleled. And so this is very, very important for companies to streamline their back office work so that they can spend more time focused on their customers and less time pushing papers. And then finally, the D is digital distribution and communication. The days of sitting down face-to-face across the table, we don't know when those days are coming back. And people are reluctant to do that. And I think that this will outlast the virus. I think we are creating a preference which was already headed this way, but the virus has really shifted this to where people are going to prefer to do business digitally as much as they possibly can. And so when you are selling your insurance product, thinking about the digital channels, from the simplest product even to the most complex product, some products may not be entirely sold digitally, but there's going to be digital components of them. And so you need to think about how your products are distributed and what parts can be made digital. And then certainly for those parts that are still require face-to-face human contact, what are those communication channels? Is that video conference? Is that, there's video capture that can take, measurements and assess risks. And there's so much that you can do remotely. There's actually very few times, even adjusting a claim, that you actually need to be there in person. So much of this can be done remotely through technology and through remote means of communication. And so thinking about these 6 trends that make up the scaled framework, these together allow your organization to be agile. And this is the number one characteristic that we each must achieve over the next decade, because we do not know with any certainty what the future holds. And so we must be able to adapt quickly to this accelerating change that we face. So what does our new normal look like? Just to give you a couple of examples. As I mentioned, sitting down with an agent or a broker may look like this, an Instagram video chat with some chat and texting capabilities along with the video over a cup of coffee, rather than being physically together in person to discuss insurance needs. It may look like having a wearable device that you wear as you go about your job, whether that be in agricultural fields, whether that be in manufacturing. And these types of devices know exactly where you are. They can they can collect data on the environmental conditions of where you are, the heat, the humidity. They can measure your heart rate. They can measure if you're sweating. They can determine whether or not you are physically active in order to be a better risk for life insurance, for accident insurance, for health insurance. There's so many different exciting technologies that are out there that are really revolutionizing, the life side of things, as well as Social Security, in addition to the non-life side. And then virtual reality and augmented reality, being able to simulate risk, being able to provide training, to provide education, to help sell insurance, to help people visualize, what their life will be like when they're retired versus today, and the impact of the different choices on what that life looks like, or what it is like to live through an earthquake or a flood, and what that might look like, and what adjustments that they need to make to help protect their property. There's a lot of different ways through gamification that people learn through trial and error on their own, that allows them to make better decisions rather than listening to experts and trusting experts only. We learn best through our own experience, and virtual reality will be able to provide that view of alternate scenarios to help our customers visualize risk, visualize the impacts, see the claims that we see every day on the carrier side, but they don't necessarily see because they only experience them one or two times in their lifetime. So we've talked about what's wrong with insurance, and we've talked about the wave of new technologies that is coming our way, and what we might need to prepare for as an industry. The question is, who will determine the future of insurance? I found this article last year in The Economist magazine that said that the future of insurance is happening without insurance firms. And this caused me a lot of pause as somebody that's a career insurance professional. And part of me felt that that's not possible. That future world without insurance firms just can't happen, because we have so much knowledge, we have so much expertise. Many carriers have been around for decades, if not centuries. We have some long-lasting institutions in insurance. But the reality is that insurance is not loved by consumers. They do not get super excited about the insurance company that they're with the way that they might get excited about products from Apple or others. There's not that brand loyalty among our customer base. And so if a new technology firm or an outside company were to come in and offer something new and different at a better price, at a better value, would they stay with a traditional insurance company, or would they make the switch? And in many ways, insurance is really, although it's been around for centuries, it is an ideal digital product. It does not require a physical manufacturing, large factories, global supply chains. It does not require billions of dollars of physical infrastructure in order to provide the products and services. It very much is meant for our digital age. And so it can be quickly replicated and improved upon. So what's changed during this year in 2020 since the publication of my book, The End of Insurance as We Know It? Well, a few things. Overnight, we have gone from a period of relative global stability to global stress. And what was considered nice to have is now a necessity. Work at home is a best example of this, where it used to be an accommodation for workers, for exceedingly talented people, or to give them a day at home here and there. to help manage their workload or take care of family members. And now it's imperative to be able to do business from home and remotely, and to collaborate together as a team. Many insurtech startups are struggling. Some have closed, have folded up, but others are thriving. Their phones have never been ringing more, they tell me, and they've really seen a huge uptick in their business. And really, the strong ones have survived. I tell people that some startups have become must-haves, and the ones that are failing are the ones that were previously called moonshots. And so the good news is that insurance has once again proven to be a resilient industry that is helping support our economies, that is helping support our citizens, and is there when times get tough. And from an innovation standpoint, these limitations, this change in the atmosphere, is actually a good thing, because true innovation springs from necessity. When times are tough, they force us to think harder, work smarter, focus more, and this is when some of the best ideas happen. Not when times are good and when things are rolling around, but when times are tough, they really help to push us forward as a society. I just want to highlight that Colombia and much of Latin America is coming up with some great innovation and new ways of working and doing business that is being recognized on the global stage. Grupo Segura is just one company that was recognized by the EFMA Accenture Innovation in Insurance Awards for core insurance transformation in 2019. They received the Silver Award. This is an awards panel that I sit on as a jurist, and I get to judge. There's been several other wonderful submissions through that process that haven't necessarily been selected as winners, but have been nominated for the awards. And so I get to see the spirit of Colombia, the passion, the innovation, and the new ways of doing business in Colombia and in Latin America in general. The entrepreneurial spirit is very strong, and I hear that so much from the community in the discussions I've had, webinars I've participated in, others. And this is a wonderful time when innovation that is happening country by country can easily cross borders and be replicated elsewhere. And so it's a very exciting time. There's a cross-pollination of ideas and energy that's occurring throughout the world. And Colombia is a big part of that. So what are some of the impacts by segment of this new world? And what areas will be touched? On the non-life side, catastrophe models are getting ever more sophisticated and helping to price risk better and better. And better catastrophe models that are much more refined, that are using sensor data, they're using artificial intelligence, allow for the use of parametrics. And parametrics are insurance contracts that basically trigger when a threshold has been set. So it could be a wind speed or an amount of rainfall or something like that. And they're really perfect for these catastrophe use cases to where things could be validated either by a sensor or by aerial imagery or whatnot, and really get the money in the hands of the people that need it very, very quickly. In the United States, a few years back, we had Hurricane Maria, a Category 5 hurricane, hit Puerto Rico. And the island was devastated, and it took 6 months for claims adjusters to be able to fly out to the island and to go out into the mountains to physically see the damage and to adjust the risk and to provide money for those homeowners. It should not have taken 6 months. We know the wind speed. We know the impact that those winds would have on those homes, the type of construction that it had. With a parametric solution, money could have been in their hands in hours not months, to help them rebuild. Telematics, of course, is critically important and growing all over the world. And many consumers are seeing more and more benefits, more value-added services from telematics. So it's not just a way to segment risk and price risk, but to actually deliver services and value for your customers. Agriculture insurance, there's a lot that is being pushed to farmers, not in the form of just insurance products itself, but also information about the weather, information about crops, about technology to help them be successful, and really creating a full partnership. Even despite poor internet connectivity in some remote parts, there are still solutions that are able to operate on very, very low bandwidth in sub-Saharan Africa and many other parts of the world that I think are very relevant. And then unemployment insurance, of course. And this is a big concern that we need to think about as artificial intelligence is used more and more. Will that cause job loss? And what are the impacts on unemployment insurance? Something to be thinking about now. Lots of talk about universal basic income and other solutions from different countries, but it is a problem that countries need to focus on now and not wait until the unemployment actually starts to happen from artificial intelligence. On the life side, certainly there's so much in the terms of health apps and biometrics that are gamification that are giving people never before seen insights into their health and changing behavior. I think that's the exciting part, is it's not just about assessing risk at a point in time, but actually working with customers, working with employers, working with citizens to help them improve their risk profile, allowing people to live longer, have healthier lives. There's a lot of power that technology can have. We're just scratching the surface on that. Certainly variable pricing based on your activity. I've seen applications where based on the number of steps, pricing can go up or down for life insurance products that typically, once they're priced, it's a fixed price over time. So very exciting. Wearables I mentioned, and then even computer vision. There's apps that can actually just take a picture of your face, and in 8 seconds they can diagnose conditions like diabetes and others. It's amazingly powerful technology to be able to diagnose conditions and to provide healthcare in an accessible way through telemedicine and others to people that either can't afford or cannot easily find a regular doctor to go see on a regular basis, that is monitoring their health even if they don't feel sick, to be more preventative in care rather than reactive. And the Social Security side, of course, we're in this global economic downturn. We are going to be in a low interest rate environment for many, many years to come. And so I worry about some of these products and, what, are we going to get a return, or do we going to cover our expected liabilities from a pension, from a Social Security side? And then what are inflation expectations? Inflation has been really low for a long period of time and really mostly globally through some of the technology. But that certainly could change over time, particularly as governments issue more and more debt to get out of this economic downturn. At some point, if inflation rises, they're going to have a difficult time paying off the debt, both at a company level and a country level. Biogenetics and other personalized medicine, personalized recommendations based on your genetic makeup, based on things specific to you rather than a pill or a medicine that we all take the same thing that has a similar impact, I think is going to do amazing jobs for longevity, for keeping our population healthier and having longer lifespans. I want to talk about the regulatory impacts, and I know that you heard from the regulator this morning, and I know that there was a challenging message, a difficult message about the change that is coming and the need for change. And I'm heartened to hear that. I think that's a very important message, and it's important to collaborate with the regulatory community to work together, because the reality is we don't all know the implications that all of these new technologies and changes are going to have on the insurance sector. Many will benefit consumers, but some may be harmful as well. I think it's important to foster a culture of innovation, to let some of these things play out, and to be cautious, to be a bit more reactive than proactive in regulatory. For instance, artificial intelligence is a great area where there's a lot of concerns about artificial intelligence. And certainly there have been findings of bias, concerns about privacy, things like that are in artificial intelligence. But at the same time, it has the promise to have tremendous potential. So I wouldn't want to regulate it so tightly that we can't see some of the benefits that AI could promise. At the same time, certainly I think it needs to be monitored, and there is an opportunity to jump in or to craft regulation if there's a sense that it's being used in a way that is harmful to consumers. And I think it's important for regulators really to talk to technology firms, to talk to startups, encourage insurtechs to come to you. Many regulators in the United States and elsewhere have told me that they would like to see more of insurtech startups come to them so that they may learn more about these technologies and explore the use cases, explore the ways that they could potentially benefit or harm consumers. And many startups tend to be adverse to regulation. I think they're a little bit worried to engage regulators. So making it friendly, offering them a coffee, being very proactive about learning about these technologies, asking questions, and then seeing how insurance carriers are starting to incorporate them, are starting to use them. I think it's very important to build a healthy relationship, to understand, and then also to look to adapt regulations. There are many regulations that are based on outmoded ways of working. I mentioned paper-based regulations. Oftentimes there's regulations that things require a handwritten signature, or that things be faxed on a certain letterhead or certain paper, or that certain documentation needs to be done. And so I would encourage, if there are regulations that are particularly onerous, and maybe today carriers are used to meeting them, and agents and brokers are used to meeting them, but they don't add a lot of value. They maybe decades ago they were important milestones, but re-examining everything from a regulatory framework and looking at it with a digital lens and asking whether or not this particular requirement makes sense in our digital world. Again, it may not be getting rid of that regulation or that rule or that requirement. It may simply be adapting it so that it still applies in a digital world. So wrapping up here, and then I welcome your questions. My advice is
cerrando y le doy la bienvenida a sus preguntas. Mi consejo es:
I just want to say that thriving in a digital age is less weightlifting and more yoga. Both build strength, but one is very much brute force, and one is based on agility and flexibility. And so that is the key mindset that we need to have moving forward. So it's been a pleasure to be with you. Thank you very much to Fasicolda for the invitation to speak at this conference. I'm sorry that I can't be with you. We can't be together in person. I hope one day to be able to travel to Bogota and to meet you in person. But it's been wonderful to be with you. And now I look forward to your questions and comments.
Rob, thank you very much. It's been very, very useful. I think that many of the remarks that you have made today are easily applied to the Colombian market. And I would like to thank you for accepting this invitation to the Fasicolda's 2020 convention. I read in newsinsurance.com, and I quote, Rob Galbraith is the most interesting man in insurance. And I think they're right. I think they are really, they really make a point, because I people were eager to listen to you, and this audience has been quite interested in what you have exposed. Let me ask you a few questions. Many of your remarks are based on a very intensive use of technology, and our markets use technology, but we do not have the access that many companies have in the US to sophisticated platforms or software, and therefore operating in a emerging market economy has many more restrictions. If you wanted, if you could perhaps point out what is the most important issue that we should concentrate or focus in the next 2 or 3 years, that would be very useful for us.
Yeah, that's a great question, Miguel. So there are, with cloud computing, there are so many offerings now that are known as software as a service or SaaS providing. And what this allows is enterprise software that was reserved only for the largest companies, the most technology advanced companies. They're the only ones that could afford it. Most companies could not afford this. It allows it to be deployed at scale so that smaller countries, smaller companies can access the same technology as the largest countries and the largest companies can. So the price point keeps coming down very, very rapidly for some of these offerings. I'm amazed when I look in the marketplace for different solutions. Sometimes I'm quoted in hundreds of thousands of dollars, but then I find another solution that is almost identical. That might be, $5,000, or that might be a licensing fee that I pay monthly, $50 a month or something to license it as a part of a subscription. So I would say that number one is that there's a lot of innovation that is being deployed quickly through the cloud that can be at price points that can be affordable. And then the second thing I would mention is that in the past, you had to have really big core systems that kind of did everything, and they didn't play well. It was kind of an all or nothing. And now I'm seeing little bits and solutions that can work with your existing workflow. They can work with paper, or they can work with email. And they don't have to be this kind of big, massive overhead, but they can be very small solutions. But depending on your workflows and your process, they can be very, very efficient for you. And so I would encourage companies to look at that and to say, what things am I doing in my process that really take a lot of time, are very manual, that don't add a lot of value, and maybe there's a small solution that I can partner with. And then finally, right, there might be a local tech firm. I spoke with a friend in Ecuador who's starting a small insurtech, and he's just working, kind of creating custom code at a very reasonable price for insurance in Ecuador.
Okay, thank you. Rob, you mentioned that perhaps face-to-face selling is going to disappear, and that we will no longer be able to have a direct contact between the insurer and the buyer. That will require training our resources to do a different type of sell. That's very challenging. Do you have any remarks on that?
It will. I agree, Miguel. What's been interesting and some of the carriers that I've advised is that they've been highly reliant on the face-to-face, and they've had to now pivot during the pandemic. And they found it difficult to have the same relationship over a Zoom meeting, a Zoom call, as they did face-to-face. And so they are really rethinking everything about how they work with customers. They're looking for different technology solutions. They're thinking about different steps of the process. And there's still a human involved in many cases. You know, this isn't maybe for this small, simple lines. Maybe it can be entirely done digital. But for most lines, particularly for commercial lines, that trust has to be there, and that's going to involve a human because there's an education for our insureds. But it's not always going to be where I can shake your hand, and it's not always going to be where I can see you on the camera. And so I think understanding how to leverage technology to keep the human element in insurance is going to be the challenge. And for each company, that's going to look a little different based on their processes, their lines, and their workflows. But wherever you are struggling today with this pandemic, if there's something that has changed about your business process, I would encourage you to start there and to think deeply about, how you're leveraging technology, whether it's sustainable or not. Maybe it's been a stopgap. And then for the parts that haven't been impacted, to look there next. But I think insurance will always remain a relationship or an industry based on relationships. But how those relationships are formed and maintained will look very different in the future.
Yeah, very interesting. Rob, we read that Google and Amazon are the insurance business. They have a huge advance because they handle databases, huge amounts of information. They are very well positioned to compete with us. Don't you think they have such a lead that they are going to basically wipe the insurance companies out of the market?
It's a great question, Miguel. I'm not so concerned about that yet, and I could be proven wrong. One of the things that we talk a lot about are moats. So if you think about your business as a castle, and how deep is your moat around your castle so that people can't come in and steal your business. And I read this the other day, and I think it really was eye-opening to me, and it made a lot of sense. For each company, again, whether you're a broker, whether you're a carrier, your data about your customers and your risks, that is your moat. That is something that Google does not have. That is something that Amazon does not have. And yes, they have access to a ton of information, a ton of data, but they really don't know how that corresponds to losses. They're not really in a position to price risk and underwrite risk today. They don't have access to the same information that you have. And so you have to leverage the information that you have. And you're going to have to use some of the technologies and adapt as we've talked about. If Google and Amazon, and I know Amazon has made some inroads, particularly in India, with the insurance sector there, if they're able to get that type of pricing and underwriting and claims information, if they're able to then apply it to all the other information they have, then they could be a worthy competitor. But today, I still feel that our data that we have of our customers gives us a competitive edge over outside firms like them, no matter how big they are.
Thank you. And while we get a feed from our executive president, Miguel Gomez, we have more questions because there's a chat in our broadcast and many people are interested in your conference and we're getting so many questions right now. Let me convey a couple of them to you. We speak of digital transformation of insurance and adapting to the digital world. Is it necessary then to have a legal feasibility or legal faculties so that electronic insurance policies become a reality?
I would say yes. I think that's very important. I know that there are different rules in different countries around this, so some have made better inroads, but insurance should be able to physically or be done entirely digitally. And so any requirements that require physical paperwork, physical signatures, I think are impediment and just add friction. And when you hear friction, that also means cost. And I think that is a deterrent. I think it can help slow the industry down. So yes, I think anything that we can do to make insurance purely digital from a regulatory standpoint. Then again, companies and insureds can decide whether or not they want to do business still in person with paper, et cetera, but not requiring those things as inhibitors for a fully digital experience is important.
Rob, some people are afraid about using artificial intelligence and the risks that imply using artificial intelligence. You can be wrong. You can choose, I don't know, algorithms or things that can work. Do you see any major risks in using artificial intelligence in the insurance industry?
That is a great question, Miguel, and I would say yes, I do think there are risks. But it's important to remember about technology, that technology is not good or bad, it just is. It's really in how we apply it and how we use it. And so I think it's important that we bring in data scientists, and these may not be people from the insurance industry, and these may not be even your actuaries or other analysts that you've typically hired. And data scientists are expensive and they're in high demand. So there may be some university students or others that can help you, or maybe there's some partnerships at the university level or something that, partnership with a regulator. But they are very powerful if used properly, and they can certainly go awry if they're used improperly. Artificial intelligence is not a great name, to be honest, because they still are not that smart. So they can do some wonderful things when set up properly, but these are not intelligent the way humans are intelligent yet, and that is a long way off. And so it is very easy to use them in a harmful way if you have not educated about them and you don't have experts that are managing it. At the same time, I think it is what is powering your GPS and your phone, and we are touching AI in every aspect of our daily lives today, in some small way, generally through our phone, but in other ways as well. So we can't ignore it either. But yes, I think there's a reason to be concerned here, Miguel.
Okay. Could you elaborate a little bit more about the economist quotation that the future of the industry will be without the insurance companies? How do you agree with that statement? Do you really think you can basically do insurance without insurance companies?
So I am on the fence between those two. So this is what I'll have to say on that headline. I don't think the entire industry is going away in 10 years and will be wholly replaced by new companies. But I do think that there will be a survival of the fittest. I think insurance firms that adapt to this new world and change and continue to evolve to meet customer needs, we'll do just fine. And those will really accelerate. In fact, I'm already seeing a little bit of what I would call winners and losers from the North American and European markets because they're everywhere I turn. And so I do think there's some leaders that are really emerging in this new economy, and then some firms that I talk to that are lagging behind. I think, and I talk about this in my book, that you could set something up similar to peer-to-peer lending using things like blockchain or other technologies that could allow for risk transfer in a way that may not look like insurance does today, and it may be very different. From a consumer point of view, all that I care about is that somebody else is taking my risk off of me, my hands, and protecting me. And how that's done, they don't really care. That's traditionally been done through our traditional products. But if somebody can come up with a new, different way to do it, whether we call it insurance or not, I think doesn't matter. And so I think that's the risk. I think people trust the insurance industry, and so they'll look for insurance companies first. But if we are not meeting their needs, if we are stuck in the 7 fatal flaws, then they will look elsewhere. And if other companies sense an opportunity to do insurance better in some way, shape, or form, then they will. That's the part of, you might see a future of insurance without insurance firms.
Rob, you use the word agile. That's not an adjective that runs well with the insurance industry. These are very robust companies, very solid, a little bit conservative, agile, flexible. Those are new characteristics that have to be developed and that are not in the nature of the industry. So what we're describing is a giant leap industry. It's scary. It is scary. Should people be scared about it?
I don't know that. So you're absolutely right, Miguel, that it can be scary. I think you can look at it one of two ways. You can see it as an opportunity, and embrace it, or I think that you can be scared and try to hold on to the old ways of doing business. And this will not happen overnight. But it could happen quicker than we think. And so that's the rub, do we have 5 years? Do we have 10 years? Do we have 20 years? When is this new future coming? Frankly, we don't know. That's why I use the maps as an example, because we used maps for such a long time. And when we first got exposed to GPS on our phones, maybe it didn't always map it right, and we thought that this is a toy or a fun game, but we didn't take it seriously. But actually, over the course of a year or two, we came to rely on it, and so it went overnight. It was just very, very quickly. So it wasn't one time we stopped using maps, but it happened much faster than we didn't even realize that we had made the switch from maps to GPS, and so that's what I worry about for our industry. So I'm not saying that it's going to be the same adoption curve, but I think that you really need to embrace that this world is coming and see it as an opportunity rather than be scared, be defensive. And yes, you're absolutely right, Miguel. This is a new skill set for us in the insurance industry that we all need to embrace.
Well, thank you so much. It's been very interesting. Your presentation was very useful. Each second was useful. And I think that you leave us with many ideas and many things that we have to work on and work on thoroughly. Once again, thank you for being with us. I hope we can have you in the near future, and that we can perhaps develop some other issues and some other subjects that that will be useful for the development of the insurance industry in Colombia. So I don't know. We are going to. I think that some books are going to be distributed to the participants today. So if you could perhaps stay just a few minutes, some of your books are going to be the prize for listening to your remarks, and I think those people are going to be very happy to receive the book. So if you can stay with us just a few minutes, you've been so generous with your time. So please, 2 or 3 minutes, and we will end your presentation today. Thank you.
Thank you, Miguel.
Sure, Rob, please stay online for this raffle of your books. And thank you to the almost 300 people that have been present here today and for the entertaining questions. Very quickly, we want to go to this surprise for attendees, where among those people that answer the survey in Fase Colda, we're also going to have 2 copies of Rob's book up for grabs. But we want you to rub off Rob's luck to win one of these. Rob, we want you to give us a number from 1 to 522. Please just pick a number between 1 and 522.
Let's go with 256.
256, and while production confirms to what attendee you just gave a book to, I want to tell all others attendees for being here today, Rob, for your courtesy and time. Any other participant that wants to obtain the book can do it at a very special price, only $20 plus shipping in this case. Sending an email to, please write it down, convencion@fasecolda.com. All right, and they're telling me that Willington Acosta is the happy winner of the first book that got a book from Rob. Thank you, Rob. And Dr. Miguel Gomez also has the opportunity of making happy one of our attendees as well. Here we have another copy of Rob's book that will be given to the person that you're going to select in this time. Give us the lucky number, sir.
145. 145.
145 then? Okay, let's just give us a minute to see who's the lucky winner. In the meantime, thank you for the conversation and the discussion and knowledge you've provided for us. You're telling me the winner is Javier Ramirez from Equidad Insurance. Second winner for today of Rob's book. Thank you so much to both of you for your participation. We wish you a nice evening.